Hi, dear students. Let's do this MCQ from May June 2021, paper 1, question number 2. So, in this question, we have some capital, but remember that you should read the question carefully because understanding the question is half of the answer. And before you get the right answer, you must look for the wrong answer because that's easier. Okay, so what increases owner's capital? It's very simple, small question. What increases owner's capital? So whatever increases the owner's capital from the option is the right answer. So these are some transactions here, and you just need to understand that transaction in order to understand why and how in any of the transaction is the capital increasing. So bank loan extended from 5 to 10 years. Now bank loan, as you should know that every item in accounting is definitely categorized in either assets, liabilities, capital, expense, or revenue. So which head of account is this one? Bank loan extended. Okay, whatever extension is going to happen, but bank loan itself is a liability. It's a liability. So this is definitely not a capital. So this is out. So easier for us now. We have three options left. Now B says purchase of inventory on credit. Okay. Inventory on credit purchases means your purchases is increasing, or you would say purchases is actually on the debit side and credit is trade payables or accounts payable or creditors. And trade payable is also actually increasing. So technically, our liability is increasing and our purchases is also increasing, which is definitely not a capital. That means this option is also out. C says purchase of machinery by check. Purchase of machinery will increase the machinery. Machinery is an asset and it will be debit when increased, and you're paying by check, hence bank is decreasing and bank decrease will be credit because it's an asset. Asset decreases credit. Now, if you're getting confused, why did I increase the trade payable and its credit? Maybe you need to follow up on another video when I explain actually what is debit and credit. And debit does not necessarily means increase, and credit does not necessarily means decrease. Okay, there are rules of debit and credit that we need to focus on. Now, D says, okay, actually, none of these three transactions have capital in it. None of these transactions have capital effect. That means either directly it's not affecting, maybe there is some indirect effect, but it doesn't show any direct effect here. So even if I don't read the D, it's highly likely that D is the answer, but let's confirm. This, it says transfer of vehicle to business from private use. That means the owner has a vehicle and he's bringing this vehicle, oops, sorry, this vehicle in the business. So doesn't this count as an investment? Or you can say owner is bringing in more capital, owner is bringing in more funds in the business. And technically, if owner brings in more funds in the business, the capital increases because capital increases when there is more investment coming in from the owners, or either from the new owner or the existing owner. Whenever any fund comes in the business in the form of investment for long term, not as a loan but investment, it is considered as capital. Whoever becomes the owner of the business after that investment becomes capital. So owner is already an owner, he's bringing in his personal vehicle in the business. That technically means he's increasing his investment in the business or capital in the business, which is D, making the right answer here. I hope you have understood this question and the reason behind the answer, but even if you didn't understand the whole thing, you must understand something because something is better than nothing.